Good evening, everyone. Let everyone join in, friends. I hope my audio and video is clear to all of you. Good evening, Zubi. Good evening, Jaypriya. Good evening, everyone. Let everyone join in, friends. We'll wait for 5 more minutes and then we will start off with today's mock test discussion. Okay. One moment, friends. Friends, how was your exam? I'm not able to see the question paper here. It's coming in assignments, I believe, right? Mock test 1. Yes. Perfect. Let me open the question paper. Let everyone join in. We'll start off in next 2 minutes time. Okay. This is the question paper we had for 70 marks over here, friends. Overall, how was your experience writing an examination, friends? Was it comfortable for all of you? Or was it difficult? Friends, we are having an objective of doing 3 mock examinations. Friends, once we do 3 different mock exams, you are getting very good exposure from an examination point of view. And trust me, this exam writing experience, sitting in one place and writing the exam consistently for 3 hours, will give you that very good leading advantage in the examination hall, friends. And my objective right now to come live is so that I can discuss with you and we can have a one-to-one session where I can show you how you are going to score marks in the upcoming exam or how the valuer is going to give you marks in the upcoming examination. All right. So let's just wait. Let everyone join in. I'm giving you 2 more minutes. In the meanwhile, let me also just a minute. Let me also show you upload the solution in the app. One moment. Okay. Okay, let me open the solution also now. It is getting uploaded, friends. Give me 1 minute. So, friends, first question. Shall we start off now? Has everyone joined in? Harish, you wrote almost fantastic, Harish. Okay, so now the objective right now is, friends, I want you to keep your answer papers along with you, and I will tell you how to give yourself marks for each of these answers. All right. If possible, keep your cameras on so I will be able to see that you're actually correcting your papers. Okay. And if you have any difficulty, then I will not force you, but if you keep it on, it will be much better for me. That's all. Okay. Right. So, shall we start off now, friends? Okay. Let me just take the solution also. It would have come here. I think still getting uploaded. It's still getting uploaded, friends. Just give me 2 more minutes. Done. We have the solutions also here. So I will just save this solution and upload it in the app so that anybody who needs it, you can always take this solution from the app. CA Inter mock test suggested. Okay. So here is the app. I will just come over here and I will add it. Mock test number 1, edit. FM, MTP. I'll do it later, friends. I'm not able to find it over here. There are so many. AFM suggested, is there Inter FM logic? Inter FM suggested mock test 1. Yes, I have uploaded the document also over here. Okay, done. Now I can share with you the document and we can discuss the solutions one by one. Okay, let me just save changes. Where is the file? Sorry, friends, I have so many files kept over here that I'm unable to find it. The interFM suggested, yes. So here we have the solution key also with us, friends. Okay. So let's take the first question. The first question was a question on factoring. So factoring, friends, it's something what we have learned in our classes, and this is a general session. So everyone can attend this session. Here the question is having how many marks? 5 marks. Friends, what they do is they are having 4 adjustments over here. Factoring commission is given. Current average collection period is given, and they have given the administration cost, annual credit sales, etc. is provided over here. All right. So friends, from this data, first thing, as I always tell you to present, start with working note number 1, basic data. For basic data, they will not give you any marks, but you will understand the question. Working note number 2 would be analysis. So when you go for analysis part, what you normally will do is that you will write down and find out the hidden information. So for example, the current collection period is how many days? 80 days. Total credit sales is how much? 90. So 90 lakhs into 80 divided by 365 will tell you what is the current amount of sundry debtors. Half percent of the debtors will default. So 90 lakhs into 0.5% will be your bad debts. The factor has agreed to pay over the money due to the company after 60 days. So earlier it was 80. Now it has come down to 60. So you are going to save interest for that 20 days because your fund blockage is getting reduced over here. It will also suffer all the bad debts losses. So is it with recourse or without recourse, friends? It is going to be without recourse. So now factoring charge is a cost to the company. Savings in the bad debts is a benefit for the company. Savings in the administration cost is an advantage for the company. And here they have told the sales, they have also given you the variable cost. Why have I given you the variable cost? To find out how much is the cost of fund blocked, on which you will be charging 15% interest. So let us check the solution now. Here they have got the administration cost saved as 1 lakh, bad debts avoided as 45,000. So total will be how much? 1 lakh 45,000. Interest savings as of now on 90 lakh, 80% is the debtors on which you pay 15%. Okay. So sorry, 90 lakh is a sale, 80% is a variable cost. So that will give you the cost of sales. On that, you're paying 15% interest earlier for 80 days. Now you're paying it for only 60 days. So what happens? You're saving for how many days? 20 days. That savings turns out to be 59,000. Cost of factoring 2%, 1 lakh 80. And your net cost of factoring turns out to be 24,000. This question carries 5 marks. So when you look at the marks, let me explain to you how it will go. For these two things, they will give you 2 marks. This and this together, another 2 marks. Sorry, this and this would mean, hold on. These are all savings. Sorry. These 3 things, let me just correct it, friends, so that you don't get confused. These 3 are savings, friends. So when you added up all the savings together, you will be getting 2 marks. For getting the cost over here and the final net benefit, they'll be providing you another 3 marks. Total, how many marks will you get in that case? You will get 5 marks. Or here, I think you have 3 adjustments here, 4 and 5. In total, you are having 5 adjustments, right? So we'll give 1 mark each to each of the adjustments. We'll put it that way. You will have a 1, a 1, a 1 here, a 1 here, and a 1 over here. Okay. Please give yourself marks for this question and let me know if you have any doubts. Yes. Is everybody clear with this part? First question, 5 marks. Yes, friends. Can I go to the second part now? Perfect. Let me go to the second question now. Okay. Question number 1 was on factoring. Let us go to question number 2 now. That is 1B. Let me take the 1B solution is there over here. Let's read through the question first. This is also solution. Wait, this is the question. Yes. Here they have given you the project cost. Let's read and understand the question together. They have given you the project cost 1 lakh. Cash flow is given. Life is given and the cost of capital is given. Based on these parameters, they are asking you to calculate the sensitivity to the initial project cost, annual cash inflows in a way that your NPV becomes 0. Friends, hold on. I am a bit confused here. I think sensitivity, is it there for your examination now? I believe this has been moved to the CA final level, or is it still there in the inter level? Please correct me if I'm going wrong over here. Pramita, it's not there for your, it's removed, right? I'm so sorry they have put this question over here. I will check and clear this up. Do one thing, ignore this question. So you put your marks from 65 marks. You don't keep it for 70. We'll keep it at 65 marks now. Okay? Right. I'll go to the next question then in that case. Removed, right? Sorry, friends. My team member who has incorporated this question, she must not be aware of it. Okay. Now let's go to question number 2A. Wait, question number 1C is a theory question where they are asking you what are the fundamental tasks of the treasury department. Friends, for this, the theory is the answer. This question is for how many marks? 4 marks. Okay. So when you come to the theory part, these are the following tasks of treasury department. You have to remember these points mainly: cash management, then you have currency management, you have fund management, you have banking, etc. Friends, if you are, not yet learned the theory part, I have taken a theory marathon. In I think 4 or 5 hours, I'm covering the entire theory part of Inter FM, friends. You can always take that from my app. You can just visit my app. Okay, if you go to courses, you have to just click on courses and just search for theory. CA Inter Theory. Okay, it's priced at 99 rupees. That's only to ensure that you all buy it and you use it. If I keep it for free, many students were not using it. Okay. Wait, Harishankar, you're not able to get this question paper on my app. Harishankar, have you installed my app in your phone or have you taken that link of class.tarunjagdish.com? Okay. So here the theory is available, friends. You can buy it. If that is the case, you would have given me a request to the Inter FM mentoring. Have you given me a request over here? If you have given, you have to enter a batch code FM mentor. The moment you enter it, I will add you. Do it right away now. I will add you in the batch. Okay. So friends, these are the points. So what you should do to learn theory is that just remember these 5 points or 4 points. Inside the points, what has to be written automatically, your brain will tell you. What challenge is required is to remember these 4 points. Every point will carry one mark each, friends. So it will be 1, 2, 3, and 4. Total will be how many marks? It will be 4 marks. Are you all clear with this part? Okay. You have to go to assignment, Zubi. You will be able to see the questions. Go to the assignments part. You can see it. Now let's come to question number 2A. 2A is a question again on receivable management. The company has a sale value of 12 lakhs, PV ratio 20%, post-tax cost of receivable is 15%, current credit terms is 1 bar 10 net 50. Friends, what do you mean by the term 1 bar 10 net 50? It means if you pay within 10 days, you get a cash discount of how much percentage? 1%. But the normal credit period is how many days? 50 days. Collection period is 40 days. 50% of the customers in terms of sales revenue are availing cash discount, and the bad debts is how much percentage of sales, friends? It is going to be 2% of sales. In order to increase the sales, the company wants to liberalize its existing term policy to 2 bar 10 net 35. Earlier it is 1 bar 10 net 50. Now they are saying that we'll make the normal credit period 35 days, and if you pay within 10 days, we will offer you 2% discount, due to which they are expecting that the sales will increase to how many lakhs? 15 lakhs. Okay. As of now, how much is the sales that they have told over here? Have they told anything? Currently, it is 12 lakhs. This 12 lakhs will increase to 15 lakhs. Percentage of default will remain the same. Average collection period will decrease by 10 days. 80% of the customers are expected to avail this discount. Tax rate is 30%. So they are asking you, should you change the credit terms? So here there are two parts, friends. This is your existing terms. This is your revised terms. Okay. Total how many marks? 5 marks. For existing terms, they will give you 2 marks. And for revised terms, you will get 3 marks. Shall we check the solution now, friends? Fine. Now they have done calculation of cash discount. Okay. So as I told you earlier, it is going to be how much percentage? 1% if you pay within how many days? Within 10 days. And I believe they have told how much percent of the people are actually paying and availing this discount over here. Everybody clear with this part? 50%. So the formula over here will be what? 12 lakh into 50% into 0.01. You get the discount as 6,000. Proposed policy, you are having 15 lakhs of sales. 80% will avail. 2% discount. So the discount cost will become how much? 24,000. Opportunity cost is on the fund blocked. Okay. So 9,60,000 will be your sales on which you don't have discount. 40 bar 360. 40 days is the credit period. On that 15% is your interest. So you are paying an interest of how much right now? 16,000. Under the new policy, what will happen? You will have increased sales, but you will be having 12 lakh of debtors. 30 days credit period into 15%, you will end up paying 15,000. So please check, friends, did you get this 6,000 as the answer? This is one of the crucial parts. And did you get 24,000? Okay. Next part, you would have got 16,000 as the interest cost for the first one, 15,000 for the second one. Tick. If these points are correct, keep ticking it. Okay. Let me come down. Then they are making a policy. This is the crucial part. Okay. You have a present policy here. Credit sales is 12. It becomes 15. Variable cost, bad debts, cash discount, profit before tax, tax, profit after tax, interest cost, your net profit. Everybody clear? So considering this, proposed policy of making more profit, hence which is better? Proposed policy is better. For this, you get 2 marks. For this, you get 3 marks. Can you please give yourself marks right now, friends? Done? Thomas, what's your doubt? We should take 15% tax. Why 15% tax? Thomas, tax rate is 30%, right? Thomas, you can unmute and speak to me. Just
Yeah, sir. Actually, in the question then it says post tax is post tax is there. So I think minus tax I meant actually. Yeah.
hold
So it
on.
is
Tax
written
is
there.
30%. Where have they told post tax?
Yeah, and on top, sir, post tax of cost of investment is 15%. So it will be 15 minus.
Cost of investment in exactly after tax is 15%. Correct. They have taken this money after tax only. See, here you have tax, they have taken after tax. I'll put it in a different
Okay.
way. Post tax 15% means pre-tax, can I say it will be 15 divided by 70 percentage?
Yeah.
So what is 15 divided by 0.7? Do you get 21.42 percentage?
Uh,
You
yes,
can
sir.
solve this using 21.42%. Then you can give the data over here. Opportunity cost will come over here in that case. This is
Okay,
correct
sir.
because post tax, this is pre tax. After this is coming after tax only. They have done it correctly.
Yes.
Okay, can I speak in Malayalam? Are you more comfortable in
Yeah.
Malayalam?
Yes, sir. Yes, sir.
You're clear, right? See, but എന്താ സംഭവിക്കുന്നത് വെച്ചാൽ പ്രീ ടാക്സ് എടുക്കുകയാണെങ്കിൽ 21.42% ആണ് എടുക്കേണ്ടത്. ഓക്കെ,
Okay.
21.42% എടുത്തുകൊണ്ട് നമ്മൾക്ക് ഒരു എമൗണ്ട് കിട്ടൂലേ, ഇൻട്രസ്റ്റ് കോസ്റ്റ് കിട്ടുമല്ലോ. ആ
Ah,
എമൗണ്ട് നിങ്ങൾക്ക് എന്ത് ചെയ്യാം, ഇവിടെ വന്നിട്ട് കൊടുക്കാം.
okay, okay.
അപ്പൊ അത് കൊടുത്തു കഴിയുമ്പോൾ പി ബി ടി കിട്ടുന്നത് എന്തായിരിക്കും, പ്രീ ടാക്സ് ആയിരിക്കും.
Pre-tax ആയിരിക്കും. Okay.
അവിടുന്ന് ടാക്സ് കുറച്ച് കഴിഞ്ഞാൽ കറക്റ്റ്ലി 1,31 1,57 ആൻസർ ആയിട്ട് കിട്ടും ചെയ്യും. ട്രൈ ചെയ്ത് നോക്കി നോക്കൂ. ഓക്കെ,
Okay, 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 sir.
യെസ്,
Mm.
ഫൈൻ. All right, friends.
Thank you,
I
sir.
believe all of you are done. Can I go to the next question now? Okay. Next question is a question on cost sheet with working capital management. Okay, let's read the question. Raw material cost is given, labor cost is given, overhead cost is given, total cost is given, profit is given, selling price is also given. The company keeps the raw material in stock on an average for how many months? 2 months. So RM stock for 2 months. Work in progress, 3 months. Finished goods, 1 month. The credit allowed by the supplier is how many months? 1.5 months. Company allows 2 months credit to its debtors. So friends, here they are giving you raw material stock, work in progress stock, finished good stock, sundry debtors, sundry creditors. So basically it's all done to calculate the working capital estimate. Okay. The company sells 25% of the output against cash and maintains cash in hand and bank together at how much money, friends? 1,50,000 rupees will be the total kept over here. Production is carried on evenly throughout the year. Okay, the wages, etc. Work in progress is 75% complete. Prepare a statement of working capital estimate for 15,000 units. So friends, step number 1, you have to find out how much is your raw material stock. Step number 2, work in progress. Step number 3, finished goods. Step number 4, debtors. Step number 5, creditors. Once you get these 5 things, you can do current asset minus current liability. That will give you the working capital. Can I take the solution and cross check now? Okay. Okay, here, let's discuss together. Inventory, you are having 15,000 units, 150 rupees. Okay, so first we'll take 15,000 units. You are keeping inventory for 2 months. So 15,000 into 2 divided by 12 will give you the units of raw material. And per unit, they are having a cost of how much rupees over here, friends? Are they having a cost of 150 rupees? So total will become how much? 3,75,000. Work in progress, how many months? 3 months. So 15,000 into 3 by 12 into how much percentage will they take? They will take 75% because it's only 75% complete. Everybody clear with this part? You'll get the answer as 7,03,125. Finished goods, 1 month, 3,12,500. When you add up these three, you get the number as 13,90,000. Then you have debtors. Okay. That is 15,000 units into selling price 250, total sale value. Total sale value into 2 divided by 12 will give you the debtors coming over here. Cash balance 1,50,000. Total current assets 20 lakh 9,000. Current liabilities mainly what? Sundry creditor is coming over here. How much? 2 lakh 81 250. Wages 50,000. Overheads is coming to 1 lakh 12,500. Total current liability 4 lakh 43. So working capital required will be how much, friends? 15 lakh 65,625. So this is one short table, friends. How many marks for this question? Let's check. 5 marks. Am I right? So what we will do is 1, 2, 3, 4. Okay, let's do one thing. For you give marks like this. Raw material, work in progress, finished goods. All the three together, you give 2 marks. Okay, raw material, work in progress, finished goods together, 2 marks. Debtors and creditors, another 2 marks. Okay, rest everything you give 1 mark. I hope you're clear now, friends. Fine. Please give yourself marks based on this. All right, friends. So I believe you are clear with this. Can I go to the next question now? Okay. Sandra, your doubt is that while calculating the debtors, why profit is not taken? Hold on. 300 is your selling price. Am I right? 300 is your selling price. Selling price includes profit also, Sandra. Am I right? Okay. It's already including profit. Okay. Right. Let me go to the next question now. Question number 3. Friends, question number 3 is a question on cash budget. They have given you a cash forecast for the months in the calendar. January sale, February sale, March sale is given. 1 minute, friends. So you have January sales, February and March sale is given. 600, 600, 800. Trader sells directly to the public against cash payments to other entities on credit. The credit sales are expected to be 4 times the value of the direct sales to the public. So from this, what information will you get? You will get cash sales versus credit sales. We have done a similar type of problem. Okay. 15% is paid to the customers in the month in which credit sales are made. 25% in the next month. 58% in the next month. The outstanding balance expected to be written off. Okay, whatever is remaining. So if you add 25 plus 15 is 40. 40 plus 58 is 98%. Okay, balance is written off. Purchases of goods are made in the month prior to the sale. That is coming to how much? 90% of the sales. So if sales is 100, purchase will be 90. Okay, payment to these occur in the month after the purchase. No inventories are held in stock. Cash balance 50,000. Okay. Yep. Harishankar, you want me to send the question paper in the crash group? It is sent in the app. If you go to assignment, you will be getting that question. Can you please check it there? Or you want me to resend it again? I can do that. 1 minute. Okay. Who put this arrow mark here? How do I remove this arrow mark now? Okay, got it. Perfect. Yes, friends. So then they have given the cash balance is 50,000. Actual sale data is given. From this, you are supposed to prepare a cash budget. All right. Harishankar, just WhatsApp me. I will send it across once you're giving marks to yourself. I'll do it now itself. Okay. So let's check. So here, if you see, total sales is given. Cash sales, credit sales. Calculation of credit sales. 512, 704, it's pulled from the earlier data. In this, 15% in the month of sale itself, 25% happens in the next month, and 58% happens in the last month. So what happens is January 15% will come based on 480. Okay. 25% the next month means 704 into 25%. 58% the last month would be 512 into 58%. Like that, they have prepared this particular table. All right. Yes. You got it, Harishankar? Great. Now, then you prepare the cash budget. So, friends, this cash budget is carrying how many marks? Let's just check. It's come for 5 marks. Okay. So, when it's for 5 marks, what I suggest is for this one working note of breaking up, you give 1 mark. This you give another 2 marks. And final cash budget, you give another 2 marks. So, like that, 1, 2, 2. Can you please give yourself marks now? Okay. Let's go to the next question now. All right. Then, friends, there's a question on risk adjusted NPV. Again, I think even this is moved out from the inter syllabus, right? It's gone to the final level. I took this in the final level, but it's getting mixed up in my head now. Just confirm, is it there for you or no? If it is not there, please ignore it. I will recheck the mock test 2 and mock test 3. Do you have risk adjusted NPV? I don't think so. I think that capital budgeting chapter is completely moved out to the final level. Removed, right? Sorry, friends. Don't give marks for this. This is again coming for 5 marks. So 2 questions will remove. We'll put the questions on how many marks now? 60 marks we will put. Okay. Okay. Now, friends, the next question is on uh, capital structure. And this is a very, very irritating area, friends. I think in your entire FM, this is the only one area which is a bit confusing. Okay. The total value of the firm is given. Market value of debt is given. Market value of equity. Net operating income. Cost of debt. Net income and cost of equity is given. KE is net income divided by the total value. Calculate the equilibrium value for firm A and firm B in accordance with the Modigliani-Miller approach. Exactly the same question, friends. It's there in your material also. We have done in my intensive marathon class also. Okay. Assuming the tax do not exist and the tax exists. Value of equity and cost of equity for both the firms. Srihari, capital budgeting traditional is retained, but sensitivity analysis, all those things have been removed. Am I right? Yes, rest everything has been removed. Please confirm, okay, if there are any RADR or anything specific that is yet pending, because from what I understand, when I check the syllabus also, it is not there. Only the traditional capital budgeting is left with you. Okay, right. Now, friends, let me come down. Okay, let me just check. So this will ignore here. As per approach, KO is equal to KEU. EU is equilibrium. Okay. So then they have a formula. KO is equal to KEU into 1 minus tax. So here there is no taxes. So it will turn out to be 9.09%. Then they take the EBIT for firm A, firm B, KO. The value will be the same. That is 5,000 divided by 9.9, 9.09%. Value of equity and cost of equity. Value of equity is 55,000 less value of debt. If you reduce, you will get the value of equity. That will be 55,000 and 25,000. Cost of equity of firm A. A is an unlevered firm, 9.09%. Cost of debt, 6%. Cost of firm, that is, there is a formula that you have learned over here. KO plus KO minus KD into debt by equity. You get the answer as 12.8%. Cost of firm of levered will also be 12.8. So both are having exactly 12.8, 12.8. Hence, Modigliani-Miller is going by the same theory that KO and your KEU ideally will be the same. Okay. Please read through this. This question is carrying how many marks? 4 marks. So we'll give 1 mark for each working note. This working note being correct, this one, you give yourself 1 mark. Okay. This is a second working note. Here you can give another 1 mark. Then you go to the third part, you get the value of levered and unlevered. Most important part, this is 2 marks. Okay. In my opinion, Modigliani-Miller is the only one confusing area for you in the inter level. Rest are all very, very straightforward. Here you have to remember some theory and keep it. That's the problem. All right, friends. Are you all done with this? Can I go to the next part now? Fine. Then we have question number 4A. Yes, friends, you have a doubt? JP, you're done. 4A. Here they have given you the equity capital 30 lakhs. Preference capital is 10 lakhs. Debenture is another 10 lakhs. It's a capital structure problem. Okay, sorry, cost of capital. Market price of equity is how much? 80 rupees. Okay. Company has paid a dividend of 14.09. Now, friends, paid dividend of 14.07. Ideally, is it D1 or D0? Since they use the word paid, it should be D0. Okay. I'm not sure how your suggested has done it, but it should be D0. Friends, do not panic in the examination hall. Which one is D1, which one is D0? If you feel it is D0, you write down D0 and give a note. It is assumed that it is D0 because the book has used the word paid. Paid is past tense. 7 years ago, it paid a dividend of 10 and expected dividend today is how much? 16 rupees. Why have they given this data? 10, 7 years back, today has become 16. This is given so that you can go and find out your growth rate. Everybody clear? That is for your growth rate. So once you get the growth rate, then we know the formula. P0 is equal to D1 divided by KE minus G. Everybody clear, friends? So by doing so, what happens is you will get the KE. Preference share is redeemable at 6% after 5 years. So we have the redemption value, current market price is there. We have the preference dividend also. From this, how will you find out KP? We have a method in your books where we have to use the formula preference dividend plus redemption value minus issue price divided by life whole divided by redemption value plus issue price divided by 2. Am I right? Approximation method. Using that method, you will get the cost of preference. Debentures are redeemable at 20% after 10 years. Flotation cost is 5 rupee per debenture. Friends, flotation cost is a cash outflow. So 5 rupees today will go from your hands. Everybody clear? So today if the face value of the debenture is 100, you have a flotation cost of 5 rupees. What is 100 minus 5 rupees? You will get the answer as 95 rupees. Everybody clear? And the redemption value will be how much? 120. Again, you can use the same approximation method formula. Tax rate is how much? 40%. In order to finance an expansion plan, the company wants to borrow 15% loan of 30 lakhs. This decision is expected to increase the dividend on equity from 16 rupees per share to 18 rupees per share. So what will happen the moment this project comes in, the price of the share increases. However, the market price of equity share is expected to decline from 80 rupees to 72 rupees because investors will expect more. So MPS changes, these are all changes. Why they are giving this is from this you can find out your marginal KD, you can find out your marginal KE, and you can find out your marginal WACC. Okay. Here you are having two requirements. One, WACC taking book value weights, WACC after expansion. After expansion is marginal weighted average cost of capital. Total 10 marks means 5 marks each requirement. Everybody clear now? Let's take the answer sheet. 1 minute. Okay, as I told you, 14.07 is equal to 10 into some future value factor for 7 years. So you get the factor as 1.407. Then they go and check the table and they come to know that this will turn out to be how much percentage? 5%. Everybody clear with this part? Okay, next. Then they will use the formula. Friends, one doubt I want to ask you. As per your rule book, you will be given a present value table or a future value table in the examination hall, correct? They should give you normally. Okay. Right. Then you are supposed to find out your KE, that is using the Gordon's model. So here you get 16 by 80 plus 0.05. That is, hold on. What they have done here is, what is the formula for P0? D1 divided by KE minus G. Or in other words, can I say KE minus G is equal to D1 divided by P0. Therefore, KE will be D1 divided by P0 plus G. This is the formula for KE. So they have taken 16 as D1. But as per the understanding that we had, what did we take your 16 as? Did we take it as D1 or D0? Expected dividend is 16 rupees per share. Okay. So that is D1. Correctly given as expected. That is D1. But 14.07 is what? D0. Last paid dividend. Everybody clear with this part? Okay. So they got the answer as 25% here. Then they got preference shares using the formula what I told you. Preference dividend plus redemption value minus issue price divided by life whole divided by the average. Logic I have explained in my regular classes, friends. KP is how much? 8%. KD also same formula, 9%. So once you get this, you have the amount, weight, KP, KD, KE, WAC, 18.4%. Everybody clear with this part now? This one working note of finding these three things and the answer is 5 marks. So if you get KE correct, KP correct, but KD wrong, you can give 1 mark for KE, 1 mark for KP, 1 mark for KD, and 2 marks for this table, weighted average cost of capital. Everybody clear? Then you are having KD, okay? Long-term debt, that is 15 into 1 minus 40% is 9. Revised KE will become 30%, and you find out the revised WAC. This will have another 5 marks, friends. Total how many marks? 10 marks. Everybody clear with this part? All right. Can I go to the next one now? Bridge finance. I think next question is a theory question. Write short notes on bridge finance and clean packing credit. Okay. So friend, this again I have covered in my theory session. You can go through it. Bridge finance and clean packing credit. Let me go to 5A now. 5A is again a question on cost of capital, equity share, preference share, debentures is given. EPS was 2.5. Expected growth is 10%. Next year, dividend is turning out to be 50%. Current market price is 25. 15% debenture can be issued, selling at 96. So, friends, again, the same thing. You have to find out KE using what model? Gordon's model. KD, you can do it using the formula interest into 1 minus tax plus redemption value, etc. KP also, I believe you can find out like that, but KP is straightforward given at a net price of 91.5. So 12 rupee dividend divided by 91.5. Straightforward, you can get the answer. And then they're asking you to calculate the marginal cost of capital. Okay, so let me show you the solution now. KE, KD, as I told you, it is directly given over here also. It's a perpetual debenture. So directly you do this divided by P1. You get 10.94. Preference share also directly given 13.11. KE, you can use Gordon's model. You get 15%. So marginal cost of capital will be in the weights, cost, WACC. Okay. The last question what they are asking is, how much can be spent for capital investment before the sale of new equity share, assuming the retained earnings for the next year is 50% of 2021. So friends, they want to maintain the same debt equity ratio. In this question, what is the debt equity ratio? 80%, 15%, 5%. So if retained earnings is going to be 50% of 2021, they will take 50% of EPS 1.25 into number of shares 62,500. So if 62,500 of equity increases, equity has to have a weight of how much percentage? 80%. So if we divide it by 80%, you will get total amount that will be 78,125. Out of 78,125, 80% equity, 15% will be preference shares and 5% will be what? Debentures. Everybody clear with this part now? Okay. So this question, how many marks is there? 6 marks. Okay. So KE, KD, KE, all these three you give 1 mark. Marginal cost of capital 2 marks. That will make it 5. Last question 1 mark. Everybody clear? Yes. So we are done with this question also. Can I go to the next one now? This is a question on EOQ. Annual demand is given, ordering cost is given, carrying cost is given. You have to find out the reorder level. What is the formula for reorder level? Maximum consumption into maximum lead time. Economic order quantity, what is the formula? Square root of 2AB divided by C. And they are giving you about quantity discount. 4-mark problem. 1 mark for reorder level, 1 mark for EOQ, 2 marks for the last requirement. I'll show you the answers now. Lead time is given. So you get the reorder level 2500 units, 1 mark. EOQ 2000 units, 1 mark. This 2 working notes, 1 mark each. 36 lakhs 9,000, 35 lakh 85,000. So which is better? Quantity discount is better. Please give yourself marks, friends. We have come to the final part. They're asking you to determine trading on equity in financial leverage analysis. Distinguish between ADR and GDR. Friends, ADR, GDR comes at the final level also. These are basically fundraising equipments. If I want to raise fund from US or from America, I should use ADR. If I want to raise money from other places other than America, I can do it using GDR, Global Depository Receipts. For that, friends, theory is given over here. It is 2 marks each. So if you write, at least you know what is the meaning, when it is issued, etc. The more points you write, the more you will get marks over there. Every point. So if 2-mark question, write 4 points. Keep that theory in your mind. Okay. Right. Now let's go to question number 6A. 6A is a question on capital budgeting. Yes, so you have machine 1, machine 2. You have life, residual value, contribution, fixed machine cost, other fixed cost, etc. is given. The maintenance costs are payable annually in advance. All the other cash flows apart from the investment occur at the end of each year. Depreciation also has been calculated by SLM method. Which machine is more beneficial using equalized annualized equivalent approach or equally EAC, equivalent annual cost? Okay, how do you work out that? Calculate the NPV for machine A, calculate the NPV for machine B, and then you divide it by the annuity factor. Okay, this question is having 10 marks. Calculate sensitivity. Oh God. Friends, ignore the sensitivity part, okay? And you first question, you give it for 5 marks and you work out. Everybody clear? So first you calculate NPV for machine 1, NPV for machine 2, and then divide it by PV annuity factor. So NPV will carry 2 marks, machine 1, NPV machine 2, 2 marks, final EAC 1 mark. Everybody clear? Look at this. Machine 1 NPV, they have done. Machine 2 NPV is done. Here they have taken the cash flow. NPV for machine 1, wait, they have, the solution has been missed out. I'll do one thing, I'll just recheck the solution and I'll upload it correctly. I think the solution is gone over here. Okay. I'll correct this and put it across, friends. I don't remember the correct answer. It has been, I think there is an editing problem. We'll correct this part. Okay. Yes. Last one is IRR. Okay. What are the limitations of IRR? IRR is a tedious process. It's very complicated. It creates a particular situation where you compare 2 projects with different outflows and inflows. So if you have same outflow inflow, it's okay. Different, it is different. It ignores the firm's ability to reinvest. Okay. If you are able to reinvest, you may get better returns. Decision only based on IRR may not be correct. You should take NPV, IRR, profitability index, etc. etc. All right, friends. So based on this, you have to give yourself marks. Anybody, can you tell me what is the answer you get for question number 6A? 6A, please check. If you have it, you let me know. Otherwise, I'll change the solution and I'll upload it for you. Okay. All right. So friends, I believe you have given yourself marks. Please add up the total marks and tell me how much you have scored. You can just personally message me in the chat box. I will wait for you. Friends, like this, we are having 3 mock tests, okay? Next Friday and the next Friday again. Write these 3 exams. I promise you, you will get very good experience from the exam perspective. Fantastic. One student has got 26. This 26 is coming out of how much? Ours was 70, 15 marks gone, so 55, correct? 26 by 55. In percentage, it is 47%. So you have scored 47%. Give me in percentage, okay? Tell me in percentage, not in marks. So divided by 55 and tell me the percentage. So if you got 47% means 1 month before the exam, you have already passed. You still have one more month. You can easily add 20% in the coming 1 month. Okay, you've got 19.5. That is 35%. So you have to score, but you still have 1 month, add 20% more, you can easily score 55 to 60%. Zubi still not attended the exam, no problem, please go and attend it. Okay, sit for 3 hours, write the exam. This exam writing experience is very, very crucial. All right, 40%, fantastic. You still have a month, we can make it better. Okay, very good. Others, everyone, please personally message me. Okay, how much of marks you got? Thomas, 66% is fantastic. You can target 88% by the time next exam comes up. Add 20% to whatever marks you get now, and that's what you can easily score if you put in the right effort and if you write 2 more mock exams. Eliza, 43 is very good. Keep it up. I'm very happy to see this efforts from your side also, friends. Write all the 3 mock test papers. I will work with you. We will work together. We will win together. Okay. Whenever you're getting pressurized, message me. Or if you want, if you have any doubts, you let me know. Okay. You can WhatsApp me personally. Send me an image of the question also so that I can understand and we can solve it together. Okay. Let's work together, friends. Any other support you want, always feel free to message me. And yes, one very important announcement. Tuesday, we have a marathon session, a full day session. RTP and MTP will be covered. So one day it will be full revision. RTP means you're covering all the chapters. MTP, again, we are covering full chapters. So in one day, you'll get full revision of FM. Please pass on the information and I will see you there on Tuesday. Thank you so much, friends. Have a nice time ahead. Take care. Thank you, everyone. Take care.